Hello everyone, welcome back to our stock analysis channel. Today I bring a report from Goldman Sachs about Workday. Well, this name maybe not very popular. Everybody one weekend, right? No, no one any Workday. And this stock Workday, it tickers is WDAY. Firstly we take a look at not this chart, should be this one. Okay, everybody know that the AI infrastructure stocks going higher and higher. However, the AI power legacy SaaS getting lower and lower. Software has never traded at a discount to the S&P 500 in the modern era. The market is heavily rewarding businesses operating as foundation AI infrastructure, and the market is aggressively punishing companies simply reframing legacy products as AI powered. Well, let's come back to our report. So every single tech CEO starts their morning by splashing AI transformation onto their slides. But as investors, our massive pain point is simple: show me the money. Right? We are exhausted by the hype, and we are desperately looking for concrete evidence of AI actually driving revenue and offsetting the visible slowdown in traditional SaaS sitcom licensing. This brings us to Workday's latest, the first quarter 2027 earnings report. Before the print, investor expectations were frankly quite bearish. Following a disappointing previous quarter, everyone was bracing for impact, but the stock jumped 11% post-result. Did they actually solve our pain point, or is this just another temporary AI band-aid? Let's look at the numbers and test their logics. Well, we can see that Goldman Sachs give a price target not very high, 151, right? The upside potential is just over 20%. Let's take a look at the chart again. Well, we can see that as one of the SaaS stock, right? It has a downward trend. However, let's do some technical analysis before we come back to the report. Hey, we can see that the RSI and the price previously it is a divergence, right? Bottom divergence, which indicate it probably goes up, right? And now Goldman Sachs give a target price almost 150, right? The green arrow is the target price, and we can see that the RSI indicator not the red circle not enter the overbought zone, right? So there are still some potential space for Workday. All right, let's come back to the report. The top line bit is that subscription revenue was 80 basic points, and operating margin comes in a healthy 130 basic points ahead of guidance. The AI spotlight is Workday reported its best first quarter for new net annual contract value growth in 5 years, breaking about 500 million in agentic AI ARR. That represents over 30% of their new net ARR, right here, right? And if you strip away the AI-specific revenue adjustment, Goldman Sachs estimate that Workday's core subscription growth is actually perfectly flat at around 12% for the 5th quarter in a row. Okay, furthermore, management kept their full-year subscription revenue guidance completely unchanged at 12% to 30%. All right. So the conclusion is that what's the ultimate conclusion? So has Workday given us a clear path to AI-driven value? Yeah, absolutely. The roadmap is much clearer, right? But we are not completely out of the woods yet. This report proves that Workday is successfully playing defense against low market expectation. However, a sustained re-rating of the stock requires them to successfully execute the rollout of this organically built AI agent and prove product market fit for their new IT service management expansion. Goldman Sachs remains neutral. Remain neutral. Neutral here, right? On the stock. Interestingly, they actually cut their 12-month price targets to 151 from 206. So why? Don't panic. It's not because they hate the business, it is because they shifted their valuation anchor from non-GAAP to strict GAAP earnings, treating Workday's like its mature large cap peers Salesforce and Adobe. Alright, it is all about Workday. It's all about Workday. So if you have any question, please don't forget to click like and leave a comment. We have one-on-one expert to talk about this stock with you. Okay, see you next time.